Hi, let us start today's concept number 7 relating to PDD or RDD or RBDD. PDD means provision for doubtful debts, RDD means reserve for doubtful debts, RBDD means reserve for bad and doubtful debts. Note down the question, concept number 7. Mr. A and Mr. B are partners in a firm. In this partnership firm, there are two partners, Mr. A and Mr. B, sharing profits and losses in the ratio of 2:2. What is the profit sharing ratio? 2:2. Their balance sheet as on 31st/3/2024 was as follows. The word used is was. It means it is old balance sheet. Balance sheet as at 31st/3/2024. Capital and liabilities amount rupees. Assets amount rupees. Capital Mr. A, Mr. B. Debtors, asset side debtors 20,000 gross amount less PDD, old PDD 1,000. Net amount is 19,000. On 1/4/2024, Mr. C is admitted into partnership on the following terms. Now this question is relating to admission of a partner because the word used is admitted. Who are the old partners? Mr. A and Mr. B. What is the old profit sharing ratio? 2:2. What is the old balance sheet date? 31st/3/2024. The date on which new partner is admitted into partnership firm? 1/4/2024. Who is a new partner? Mr. C. Earlier, how many partners were there? 2. Who were those? Mr. A and Mr. B. Now hereby how many partners will be in the partnership firm? 3. Who will be those? Mr. A, Mr. B and Mr. C. Adjustments. Maintain provision for doubtful debts on the debtors at rupees 800. They are saying that old PDD is 1,000, but you have to maintain only 800. It means that 1,000 PDD became 800. There is a decrease in the PDD by rupees 200. Show how do you treat the PDD. So this is the question. Pause the video. Completely note down the question. Write the question and start the solution. Let us start solution. Solution to concept number 7. Revaluation account. Draw the revaluation account like this. Debit side expenses and losses amount rupees. Credit side revenue, income, profit, gain amount rupees. Instead of this you can write particulars. Now how to write the PDD in the revaluation account? If there is increase in the PDD, write on the debit side of the revaluation account. If there is a decrease in the PDD, write on the credit side of the revaluation account. In this question, old PDD was 1,000, new PDD is 800, 1,000 PDD become 800. It means there is a decrease in the PDD. I told you for decrease in the PDD, write on the credit side of the revaluation account. If you want to know the rules of debit and credit, as per the England system, British system, PDD is a personal account. When there is decrease in the PDD, partnership will return that much of the amount to the partners. There is a reduction in the provision. On the another side, for decrease in the PDD, there is income to the partnership firm. So credit the incomes and gains, nominal account. Credit the incomes and gains. Debtor PDD is a personal account, debit the receiver. Means partnership firm return that much of the amount to the partners. Entry is PDD account debit to revaluation account. PDD account debit to revaluation account. This is journal entry. In this journal entry, PDD is debited, revaluation account is credited. Now we are preparing revaluation account. So revaluation account is credited. That's why we should write on the credit side. Which account name? PDD account. As per the American accounting system or accounting equation approach, rules of debit and credit applicable is like this. PDD is a liability. All the provisions are liability. Decrease in the PDD, debit. Because of decrease in the PDD, there will be a profit. There is a profit. Income. Revenue. Increase in the revenue, credit. Journal entry is PDD account debit to revaluation account. Revaluation account is credited by PDD. Old PDD minus new PDD. Old PDD in the old balance sheet 1000, that is in the question, minus new PDD is 800, that is given in the question adjustments. Net decrease is 200. Step number 2, draw the new balance sheet as at 1/4/2024. Capital and liabilities amount rupees. Assets amount rupees. Capital Mr. A, Mr. B, Mr. C. Assets, debtors from the old balance sheet 20,000 gross, less PDD, old PDD minus decrease. Old PDD given in the old balance sheet 1000 minus decrease in the PDD from the revaluation account. Now 1000 minus 200 is 800. 20,000 minus 800 is 19,200. This is concept number 7. If it is useful to you, if you are understanding it, like it, subscribe it, share it to your friends in a different cities. In the comment box, write your name, your college name and city. Okay, thank you.